Semi-detached homes or half duplexes here in Calgary have seen the biggest increase out of all property types year over year at $35,000. I don't expect this to slow down too much in 2025, but I could be mistaken. Let's get into it. My name's Adam Fyfe, your Calgary Realtor. Go ahead, click the links in the description. There is a lot of free information for you to browse through with no contact information needed besides the instant home evaluation. Did you know that there is a Calgary Comic and Entertainment Expo coming up on the 24th? The Calgary Surge Home Opener, or the Canadian Basketball League, is happening in Calgary, as well as the Lilac Festival. There's a lot of cool activities coming up in Calgary. I do plan on updating this every single week. And if you are looking for some additional information, there are PDF reports, buyer's guides, all sorts of different things for you to browse through. But you didn't come here for that. You came in here for market reports. If you want to see what the other market reports I have recorded for all of the property types, scan this QR code. It'll bring you to my website. There's a lot of information there. So here is the written description from the Calgary Real Estate Board. I'm going to go ahead and read it. If you want to read it on your own, skip to the next chapter. March sales slowed over last year's levels, contributing to the first quarter decline of 11%. The decline in sales also was met with a gain in new listings. While conditions still remain relatively tight over the first 2 months of the year, boosts in new listings in March relative to sales did support further gains in inventory levels, causing the months of supply to push up to 2.2 months, the highest monthly level reported since the end of 2022. Still a seller's market, I might add. The shift to more balanced conditions is slowing the pace of growth compared to last year. So let's dive into it, okay? Now, like mentioned before, $691,900 for a semi-detached here in Calgary. As I always say, go to the attributes, links in the description, go ahead and see what exactly that is in Calgary. For this example, it's a 2005 built home. Still a 5% year over year gain, down almost 2% from last month. So last month it was around 7%. Now it's around 5%. So we are noticing a slower growth year over year, but $8,400 from last month and $35,000 from last year. So we're still seeing increases in this market. If you look at this chart here, the red line is the price point. You can see that semi-detached, again, has actually just broken the record for the most expensive they have ever been in Calgary's history, period. Okay, you can see that last year we had sales outpace inventory, which obviously incurred in a pretty aggressive price decline. Like most property types, they saw a slowdown in Q3, Q4. We saw a pretty big uptick in inventory. Look at the inventory now compared to the sales, right? The sales have dropped, the inventory has increased, yet our price is still increasing. So what does that mean? The inventory for the entire city is going up. But does that mean every quadrant is seeing inventory level increases? Probably not, right? There's probably some communities over others that are seeing massive inventory. So we need to break it down. Now, here's a quick overview of the semi-detached market. I only really look at the year-to-dates here. So last year compared to this year, we are down in sales. We are down in sales volume. We are up in new listings, which is great to see. We're up in inventory, which is still only 347 year-to-date average, right? The month of March itself had 413 units in the entire city. Months of supply, the year-to-date average is 205. For the month of March itself, it was 22, so we're up 80%. Sales to new listing ratio, we're down quite substantially. Down to 60%. Still seller's market territory, but definitely going towards a balanced market. Sales to new list price, right? Last year we were at 101. Now we're below 100 days on market. We've slowed down quite a bit to 32 days year-to-date average. But for the month of March, it was still 28, so still relatively quick. And then the price points we're going to touch on in future slides. So we're going to break this down now. Sales. This is total sales for the entire city. You can see that the sales are fairly in line with the 10-year average, right? 2022 outlier, you've heard me say this so many times, right? That was a crazy year for Calgary. Now we're starting to kind of find that balance around 500 sales per year, right? Slowed down from last year's super hot sellers market. Great to see. You can see this is a breakdown of the price points. You can see that the $500,000 price point is the outlier. So if you're looking for a semi-detached home, you're in the $500,000 range, you're probably going to see a lot more activity, a little bit more competition, right? A little bit less in the $700,000 range, and then it shoots up for $800,000 and then $1 million. I was actually lucky enough to help a client purchase a over $1 million semi-detached home in Northwest. That was a pretty interesting transaction. It was really cool. It was brand new, very lovely unit, but not that popular in the sense that there is more people interested in the $500,000 range. So if you want to know what these, if you want to break it down in a little bit more detail, you can go here, just pause the video. When you want to look at breaking it down into towards the quadrants and kind of where they're at, semi-detached are green. You can see the most amount of sales is in one of the most expensive quadrants, 50 in city center, followed by south and southeast. If we look at the new listings, okay, we're going to start to talk about how the inventory levels are affecting this market. We actually are still at kind of lows for new listings, right? Like 2023, 2024, pretty wild to see that we are lower in the new listing area than we were from our super depressed years of 2015 to 2019. After the oil crash, all this stuff happened. Calgary went through some depressions there with the housing market, and we're actually at the same level as what we were at that time, but we're seeing a lot more sales, and the pricing has gone up probably 50% since that time, right? We can look at that if you're curious. Now, this is the same information, just a little bit of a breakdown numerically. So you can see the sales, right, 184. You can see the new listings is 335, right? We're basically right at where we were last year in May. You can see the inventory levels was 413. Again, a welcoming number, to be honest. You can see last year we only had half, like 200 homes left over at the end of the month, so not very much selection in the entire city of Calgary. Days on market was 28 days. So we have seen a pretty, noticeable slowdown compared to last year, again, which is a good thing. Be interesting to see if we break those 20 days on market. I doubt it. I don't think we'll get that low this year. Maybe 21, 22 days in peak selling markets, but I just don't think we're going to break that 20. Benchmark price 691, medium price 619, and then average price 714. It's interesting to see. You know what? Actually, I'm going to talk on that in a second. There's this slide here. So let's go over here. So I pulled up this chart. So this is more information, the daily market summary, but you can see it actually breaks it down going back 2 years. So it's quite interesting if you start to break this down, right? The biggest thing that I would like to point out, well, not the biggest thing, but one of the most interesting things is that pricing has gone up 20% since 2023. The benchmark price for the same attributes was 577. Now it is 691, over 120, about 115,000-ish more than what it was 2 years ago. Pretty crazy stuff. The median price, right, has fallen, and the average price has fallen as well, yet the benchmark attributes have increased. So even if you look at just the year-to-dates, right, the year-to-date for just the month of April, you can see that the median price was 611, now we're at 590, and the average price was 692, now we're at 660. So what that tells me is the lower end market is actually pushing up the price rather than the luxury market pulling it up. Usually, well, not usually, but what I would imagine typically is because the higher end luxury market sees massive swings of like $100,000 like it's nobody's business. Usually it's that market that pulls it up. But for the last 3 to 4 years, I've noticed that it's actually been the lower end market that's pushed it up. Like I remember when semi-detached homes were like $350, right? A 1960s bungalow with a illegal basement suite with no garage with still a fenced backyard is $350. Now, good luck finding that, right? It's very, very difficult. So a couple of the numbers here, if you want to pause the video, we can go over this personally if you want. Go ahead and book a Zoom call. The link's in the description. We can go over all of this data plus the MLS for your personal needs in the semi-detached market. Now, here's the months of supply. So this is where we start to break it down in terms of how fast the market is moving. So we're only paying attention to this block here. You can see that Northeast is 3.5 months of inventory, which is a balanced market. Definitely more of a buyer's market is when you compare it to Southeast. Southeast is still at 1 month of supply, which is still a very strong seller's market. So if you're looking at the market in Southeast, if we go over here, we go Southeast, right? We're only looking at semi-detached. I'm just looking at solds as an example over the past month and a bit, 37 units, right? Let's just take a quick peek at what's going on. Right now I have it organized from the highest percentage over to the lowest percentage under in Ogden, right? This one listed at 540, end up selling for 510 after 35 days. You can see that the highest was Rangeview, Southeast. Look at all this. Oh, I guess we're all Southeast anyways. It's 564, sold for 598 after 42 days, right? So we really want to start to break these numbers down and figure out how it's actually going to affect you, because not every single one of these sales is going to affect you directly. You might not be looking for a 2013, or you might not be looking for a brand new unit. Maybe you're looking for something that's a little bit older, like this 1998 Douglasdale, right? 624, still sold for 614. So quite a bit under 2%. So where I'm getting at, just do your research, right? You can see City Center 2.5 and then North at 3 months. So there's still some balanced market territory quadrants here, but when you start to look at some of the stuff like this, where you got a really low month of supply, be prepared to get into a pretty intense market. So with that in mind, like I've said in every other video, inventory is increasing, which is fantastic, right? We want to see a little bit more inventory increase. We do not want to be in this ultra hot sellers market like Toronto was for 5-6 years, like Vancouver was for 5 or 6 years, right? We had our 2-3 years of ultra hot sellers markets. Now we're starting to get into balance. Yes, we've seen some increases in price point, but we're not going to see those wild increases in price point like they have in other provinces. So with that in mind, you can see that the trend, months of supply, fairly similar to last year in a sense. You can see that there's a lot more 2 months of supply compared to last year. We were dabbling under 2 months, right? You can see we're kind of more in alignment with 2022, kind of slowness, months of supply compared to that. I totally spaced on that one. Anyways, let's keep moving on. So when we look at semi-detached, you start to see, okay, this has been the market that has seen the most amount of increases in price over all property types. You can see detached saw on average 4%, apartments were at 2%, row was at 2%, and then the total residential, which is a totally different class. It's not the average of these, which doesn't make sense to me in a way, but you can start to see some negatives. But either way, you can see that even West is seeing still 6% year over year. City Center still 5%. South, Southeast over 5%. So there's still some growth in this area. So just be aware of that when you're looking at the market. So if you're curious of what your home is valued at in today's market, go ahead, put it in here. The link's in the description. Myself or my team will reach out. We'll say hi. If you're not looking to sell your property, that's fine. We're just trying to offer you some value, try to offer you a service, and just give you some general understanding of what the market is doing. Go ahead and scan this QR code. It'll take you to that website if you so feel. But let's continue on. So this is the total breakdown of each individual quadrant. So let's just zoom in here. I'm already way too late because people have probably seen the stuff on the right-hand side. So let's just start here. You've got your sales for the quadrants. You can see even East has only seen 7 sales in the entire quadrant. New listings, sales to new listings ratio, right? You can see North is under 40%. You can see a couple 40%, Northeast, East. You can see Northwest has only seen 40%. So we are noticing a pretty big shift in the sales to new listings ratio, meaning that you want to be careful as to when you're listing your property. You want to make sure that you're listing it at a very fair market value. You don't want to overstretch yourself. If you end up going under market value for that strategy, you could still see some pretty quick movement, right? Inventory, months of supply, you can see that there's still a few months, right, of under 2 months of supply, right? You've got your West, your South, and your Southeast all seeing 2 months of supply. You can see Northeast is very common, right? It's most affordable, but it's one of the bigger quadrants. There's a lot of development in this area. They are at 3.5 months of supply. Balanced market, very quickly going to a buyer's market. So with that in mind, let's go back up here. Let's zoom out, and you can see that there are still some massive month-over-month increases. City Center, 13,000. Northwest, 557. North, 57. West, $27,000 increase month over month. West actually saw a $13,000 and a $27,000 increase, which makes me think, well, it's the higher end market around the $800,000 price range that is seeing those big increases. But when you start to look at the average price, there's more lower end homes compared to last year that's pushing up that number, right? So pretty wild. It's pretty cool to kind of break down these numbers. So what does that look like, right? When we start to go to the MLS here, let's just go and look at West, right? This is one of the things that we would go over in a consultation, try to get you understanding of what's going on. Let's go back to this list to sales price ratio. You can see this North Glenmore Park, right? 900,000 sold for just over $1 million. 550 sold for 620. 884, 5. Wow. 584 going for 630. Okay, you can see there's still quite a bit of movement, but the more important thing I want to point out is look at all of these dates, right? You can see that there's still a pretty good amount of homes that have sold in the last month and a half under double digits, under 2 weeks, right? There's still a lot of movement in this market in the west side, in the west end, right? You want to start to break it down by the year built and the size, and if they have a suite or not, if they have a garage, if it's development, stuff like this. But when we start to look at these numbers, right, it is pretty crazy to see that we're seeing $27,000 increase of the benchmark attributes month over month and $13,000 from the month prior, right? So with that in mind, yeah, we are seeing a decline in the year over year benchmark change. We're still in the positives. We're still at 5% like we just went over, but we're not above the 10% as what we saw in 2023. Will this dip down into the negative year-over-year growth? I don't think so in 2025. That is an honest That is an honest guess, right? We are still increasing, right? There's an election coming up. Unemployment is not favorable. Tariffs are all over the map. It's very hard to say what's going to happen. But with that in mind, there's still a lot of demand in the Calgary market. I know a lot of you like to argue with me and say, well, the economic and the economy is not doing that well. Well, in the high level overview, you're right. Canada is not doing that hot. But when you start to boil it down to Calgary, we're still doing relatively well. Yes, of course, our unemployment rate is higher. Look at all of the people that moved here in the last 2 years. It's a lot of people. No wonder our unemployment rate is going up. I know people that are looking for jobs. Good luck. It's very difficult to find good jobs at this time because it's just so saturated with people that have moved here. All those people, not all, but a good chunk of those people want to buy real estate at some point. They moved here for a better opportunity to afford affordable housing. So the semi-detached market, yeah, of course, we're going to slow down. Am I seeing negatives in 2025? Not yet, right? I will be honest with you guys when I start to think that. When I start to see some changes like I have seen in the apartment market, right? I wish I had some of the apartment numbers here. But in the apartment market, yeah, I totally see some negatives coming in 2025. Semi-detached, not so much. So, like mentioned, if you're looking to, create a game plan, have a conversation, plan out your next year or two, go ahead and reach out. The link's in the description. Book a Zoom call. More than happy to talk to you. I promise I'm fairly easy to talk to. I love to have these conversations. I'm very data driven with all of this stuff going here and here and then all the PDFs. So thank you very much. Comment your questions. We'll see you on the next one. Peace.